you look at our alternative investment survey for 2019, it's the first time you've seen Asia and China within that at the absolute forefront in the minds of investors for 2019 as first stops for new allocations outside of the United States, outside of Europe, certainly. If you look over the last 5 years, that growth has actually engineered not only great volatility, but real returns, such that I think the real debate is, where are there growth markets that rival a China or India anywhere else in the world? And if you look at the last decade, I think one of the biggest thematics is the accessibility when it comes to Asian markets, and certainly China and India among them being quite particular in the way of upside that's been demonstrated over the last 10 years. So when I think about China specifically, certainly the WFOE idea in terms of foreign-owned entities having wholly owned subsidiaries onshore in China, that is an extraordinary phenomenon and one that has a great deal of potential for the rest of our careers. In fact, when I look back and I think about 2014 and China Connect, the debut, the advent of, I still think that's probably the most important event of the last decade when it comes to investing in China. Investors are coming to Asia at a time where it's just more accessible and the arguments around why are more obvious. You as well would look at India in tandem with China. Harder market to access for sure, but certainly you see there are avenues opening there. And I think that there's a backdrop that's much more, in my opinion, organic in the way of real growth arguments around the consumption space, the capital goods space, the retail banks, where you have fundamental premise that marries itself with liquidity now. And that, I think, is the premise behind why you invest in equity. So in China and India, market structure now is working to marry itself with a renewed appetite for risk in both those markets. So very exciting time for China and India in 2019, 2020.